And welcome to Real Money, everyone. This is Doug Stone. Thanks for spending part of your Saturday with us. Beautiful day here in the Rogue Valley. Finance. Today we're going to be continuing The Richest Man in Babylon, some wealth principles. Today's topic is going to be, does hard work always produce the success that you're looking for? So we're going to discuss that and go into a lot of other things. I know there's a lot of people that buy and watch the gold market on a regular basis. Did you see yesterday during trading hours, particularly early on in the trading day, that gold actually was trading below, gold futures that is, just don't want to get that confused, gold futures, April contracts were actually trading below the $1,600 mark for the first time in quite a long time. So,
yeah, I saw that on your post.
And so people always, have this association with, well, there's so many bad things going on in the U.S. economy. Why isn't gold at $3,000 now? Here's a little tip for you if you want to check this out. Gold is more closely now correlated with the U.S. dollar. So you can find out about that fun fact if you're so inclined. You can pull up a couple symbols here to track that and see how they move in opposite or reverse correlation with one another. Those two symbols are UUP, so that's Uncle Paul. That is an exchange traded dollar index fund that tracks the US dollar, and then you can type in GLD, which tracks the gold market, and see how those things move in negative correlation to one another. So how about buy and hold? How does that work? And why does it work? And why do people still think that it works today? So if you follow the show on a regular basis, you know that I'm not a big fan. And I know that, if you followed, that things have changed significantly. So I thought I would sort of break this down, drill this down into why I say that. Because a lot of people say that, but they don't really have reasons why. So I want you to think about some of these things. That's why I do this show, to get you to start thinking and not just reacting and following the media hype and the newspapers and all this wonderful stuff. So, first of all, buy and hold implies that the owning assets, or the risk of owning assets in stocks, basically, is always justified by the reward. Okay, what do I mean by that? So if you take that to the logical conclusion, you're making the assumption that every day in the equity markets is a good day and a good year. So buy and hold implies that you believe that keeping the same positions eventually will turn you into a profit. Here's the next one. It also implies that price doesn't matter. So you buy something at XYZ price, if you buy it and hold it, you're assuming and taking on the implication that price doesn't matter. Right?
Right.
Price falls, the price goes up, the price goes down. It's irrelevant to you, you're assuming, if you're going to hold that position.
That it will eventually be more than what you paid for it.
That's what your hope is.
That's what your hope is.
But by implication, by using this strategy, you're implying that the price doesn't matter because you're going to hold it anyway.
Right. That's true.
So, where else in your life does price not matter?
Nowhere.
Nowhere. Of course, it matters everywhere. Here's another one. First of all, buy and hold is purely, specifically an offensive investment strategy that completely ignores the other half of the investing equation, which is risk management. So if you're buying and holding, that's strictly a growth strategy, right?
That's true.
There's nothing in there to offset or address the defensive side of the equation. In fact, you're implying that risk is something to be accepted instead of controlled. And can you control risk? Yes, you can. Now, continuing the series that we're doing, The Richest Man in Babylon, Wealth Principles. Today's topic is hard work is no guarantee of producing wealth. I know that may be a shocker to some of you, but I'll explain what I mean by that. Let me sort of set the stage here. We're talking about our famous friend from the classic novel, Richest Man in Babylon, the chariot maker. So if you're following the series, you know his name is Banzer.
Yes.
So he's lamenting today, by the way, and he says, "From early dawn until darkness stopped me, I have labored to build the finest chariots any man could make, soft-heartedly hoping someday the gods would recognize my worthy deeds and bestow upon me great prosperity. This they have not done. At last I realize this they will never do." So again, and how does this relate to building wealth? Hard work alone is not a ticket to wealth. It never has been, and it never will be. What do I mean? It doesn't matter how much you're making currently. That is no indication of your potential to accumulate wealth. Doesn't matter what you make, it's more what you spend. Having more money doesn't fix that, right? There's plenty of people that have become very famous, very wealthy, that have become broke and or bankrupt. So there's something else missing in this equation besides just hard work. So here's the key point. It doesn't matter where you're at, what you're doing, if you have the ability to earn some income or the way to make some money, you have the potential to create some wealth. Hard work without consideration for what you do with those earnings is futile and laziness. Ugh, that's a big phrase right there. Mm-hmm. You have to be clever about what you do with what you earn, regardless of how much that is. Thanks everyone for joining us. We'll pick this up next week. I hope you're enjoying this series, because I am, and feel free to give me some comments.